Wait and watch. Let's put this question to our experts as well. Nilesh Jain, Head AVP of Technical and Derivatives Research at Centrum with us on the charts and the derivative positions. Aditya Shah, founder at Hercules Advisors with us on the show as well. Thank you so much, gentlemen, both of you. Now, usually we start with charts and the Nifty call, but since we just finished Ashok Leyland, Aditya, I'm inclined to come to you and just understand, what did you make of what the CV and the MHCV space companies are have done in quarter 3 and are saying about the times ahead? Is it making you constructive on an iShare, maybe a Ashok Leyland, who knows, maybe even a Tata Motors?
Good morning, Neeraj. So I'm positive on the MHCV space per se. I would be very constructive firstly on Mahindra and Mahindra because it's four-wheelers as well as tractors as well as a little bit of MHCV as well. So the entire space will do pretty well over the period of next 1.5 to 2 years. As the economy starts to turn little by little, the tax cuts will start to play out in the next 1.5 to 2 years, and the economy slowdown will get abated with a lot of measures that the government is really taking. So from my perspective, the number one pick within this pack will continue to remain Mahindra and Mahindra, as the company is doing exceptionally well. All of this is tied to the economy. As the economy will do well, all of these companies will also start to do well. So constructive on the entire space. Mahindra and Mahindra will continue to remain the top pick.
Okay. M&M remains the top pick, not necessarily for the commercial vehicle reasons alone, according to Aditya, but a clutch of others. Nilesh, good morning. And did yesterday seem like a day of resilience to you, or just another day in the series of downticks that we've seen? What would be your positioning be today on open, on the Nifty Bank?
Very good morning, you. Good morning, everyone. So yesterday was an interesting setup that we have seen. Nifty has found a very strong support at 22,800, and it could be a potential reversal candle, but still we need a confirmation which will come today. Yesterday was a doji candle after 5 days of constant decline. There was a little bit of respite that we have seen, but still I would advise to remain cautious till time we don't cross 23,400 levels on the upside. So it can be merely a pullback that we may see today. And today being a weekly FN expiry for the Nifty, the data suggests that 23,000 strike on the put side yesterday has witnessed fresh put writing followed by 22,900. At the same time, the call writers are still active at 23,100, 23,200 strike. So looking at the setup from expiry point of view, we may see a positive expiry in the range of 23,000 to 23,150. But overall, I would be a little cautious in the Nifty. Bank Nifty is giving more comfort, given the kind of a setup and performance that we have seen recently. Yesterday as well, we have seen a good close above 21 DMA. So that is a kind of positive setup that we have seen in the Bank Nifty. We are bullish for upside move to continue towards 49,800 or 50,000 with a stop loss below 49,000 on the closing basis. A long trade can be initiated at current level and on declines.
Right. Thanks, Nilesh. So, Nilesh, are you saying that if there is that cautiousness that continues to remain, however, the trend reversal that could come in, how much certainty is there whether it will sustain or not? What are charts indicating?
See, there are very high possibility of Nifty not slipping below 22,800. So that's number one. Number two, looking at the data, I would wait for a breakout to come in about 23,200. At least that's the first level of confirmation that we'll get that Nifty has formed a short-term base. But as of now, it's into no trading zone, I would say. A breakout about 23,200 can be a good bet to initiate on the long side. That will be the first trigger of a confirmation. But as mentioned, Bank Nifty is giving a confirmation, so there are a very high possibility of Nifty bottoming out at these levels. But it is advisable to focus on sectors and stocks. As of now, it is better to stay away till the time we get any confirmation. The volatility index India VIX, if you just look at IVs which are constantly moving higher, it needs to cool off below 14 to give more comfort to the bulls. But as of now, the kind of momentum that we are witnessing in IVs are also a cause of concern.
Okay. Now, what about your ideas for the day today, Nilesh?
So I have two buy recommendations. So we have seen a good move in Bata India yesterday. After budget, we saw some profit taking. Now, once again, the momentum has begun. So overall setup in the Bata India looks positive for a follow-up move to continue towards 1395. So that's the immediate target, followed by 1450. But the first target would be 1395 with a stop loss below 1324. Bata India can be bought at current level. The another space that is looking very attractive is NBFC. So NBFC, be it Bajaj Finance, SBI Card, Chola Finance, all these three stocks are looking attractive. But within these three stocks, Chola Finance will be our preferred bet. Yesterday, it has formed a good reversal candle exactly from the breakout zone of 1320. So Chola Finance looks attractive for 1401 target on the upside with a stop loss below 1328. It can also be bought.
It's time for a short break. Gentlemen, do stay with us, and viewers will be back on the other side. We've got lots more stocks to discuss ahead of start of trade. Do stay tuned.
All right, back with India Market Open right here on NDTV Profit, and it looks to be a start which could be, well, I don't know, mixed if you will. The question only is, will it stay that way or could it improve? For now, 34 odd points. Let's see if there is more in store. You know what could give a fillip, of course, is banking, right? And we'll talk about Kotak Bank in a moment, but we've discussed Kotak Bank for a little bit already. Aditya, I'm inclined to ask you if you believe ICICI Bank could also benefit materially by this whole thing of ICICI Prudential AMC listing at some point of time, right? I mean, they've just announced the plan. It could well take 12 months. What's the sentiment impact on ICICI Bank, you reckon, because of this?
Positive for ICICI Bank because this is going to value unlock. And similarly, ICICI, Kotak, SBI, all of them will have to list their AMCs and insurance arm at some point in time. So it is value unlocking for all of them. Particularly for ICICI Bank, I think that it is the market leader now since HDFC Bank is really struggling with the margin issues and the integration of the merger. ICICI Bank, meanwhile, is really very strong. The asset quality continues to remain very good and the loan growth also continues to be really very strong. So this is positive for ICICI Bank and for all those banks who have an AMC and an insurance arm attached to their banking stock.
Okay. So, Shrikant Chauhan joins in and we'll talk to Shrikant Chauhan about everything else but Kotak. Obviously, we can't ask him about Kotak. But Nilesh, before we thank you, because Kotak and ICICI Bank would both be in focus, let's assume both of them start gap up. Would you trade either of them after the gap up?
Right. So as at the beginning of my commentary, as mentioned, Bank Nifty is looking attractive compared to the Nifty index, and we may see an outperformance to continue the Bank Nifty. On the back of that, Kotak Mahindra Bank is our preferred bet within the banking space. We continue to remain bullish for upside target of 2000 plus. So it can be bought at current level, can also be bought on the gap up node, but provided it should open somewhere around 1960, 1980. So there's also a good range to enter. 2000 on immediate basis and 2080, 2100 could be the next potential target. Stop loss should be placed below 1900, can be added on gap up and can also be bought on declines.
Okay. Nilesh, we'll leave it at that. Thank you so much for taking the time out and being with us. Really appreciate your time. 15 seconds left to pre-open.